Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. Happy Monday to you. I hope you're having an amazing day. Obviously hard to say that when we see such redness across the market. I get that, totally all good. But what we're going to do today is kind of take an abstract look at best and worst case scenarios, make sure we understand all perspectives here, just to ensure that we're fully prepared. Because honestly, it's difficult, and I find difficulty in seeing others attached to specific directions or patterns that can kind of sometimes work, sometimes not. Again, we'll look at different things, of course, here today, kind of help you understand best practice and big picture, but generally speaking, I want you to keep an open mind, and hopefully we can look at a few different things here and kind of see, from a holistic standpoint, what could potentially happen in either direction, okay? All right, that being said, not a financial advisor, just love teaching people how to trade. I hope you can learn something here today. And if you're new to the channel, consider joining. CryptoCache.tech is the website, link in the description below. I have a trading community, trading academy, and a signal group as well. Honestly, not a lot of signals have been sent out recently because we're waiting to try to find the bottom. So instead of shorting, we're trying to take some longer positions and essentially get that bounce. Now, again, that may or may not happen. We got to take a look here, of course, and identify. But generally speaking, I feel like we are getting close to the bottom, just based on the fact that we're hitting the lower parts of this trend line. Yes, this trend may not continue forever, but generally speaking, we still have a decent amount of support here, and I'll explain what I mean by that. First things first, let's go ahead and take just a big picture approach here. All right, so looking at the 1 month, just kind of draw perspective. We are making higher lows still on the 1 month and higher highs. So that hasn't changed. You could essentially argue that we have a really big channel here, essentially, that's going to slowly continue to progress upwards. Again, that's a very rough estimate, but generally speaking, that should be the anticipation. So regardless of the fact that we're having a red month now, doesn't take away from the fact that we could still see some increase. And again, big picture, the way that market capitalization and the amount of Bitcoin availability, it's safe to presume that Bitcoin's going to increase in value over time. Please try to consider that. So again, if you're day trading, totally makes sense this. But if you're day trading, or sorry to say swing trading, or more investment trading, I would just keep an open mind and consider the fact that this is still a pretty good value in the big picture compared to where it could be. Okay, so I do think we'll still see a larger increase eventually, but for now, let's go ahead and deal with what we got here. So we're above 50 on the RSI still. Now we've been maintaining that for quite some time, almost since its inception. So honestly, you could argue the fact that that's irrelevant, but it is true in the sense that the overall sentiment is still considered to be a good value and not to be considered to be overbought. Okay. In other words, this could very well change and we lose 50 on the RSI, and if the price comes below, that's going to be a different story. Okay. But until we get there, we can consider the overall trend still very positive and has a good outlook, if that makes sense. Okay. So again, just big picture, that's kind of what we're looking at for the monthly. Weekly tells a slightly different story, of course, because it's shorter, a little bit less data, so to speak. And essentially what we're looking at here is we can see 50 on the RSI is sort of working as a resistance. Now, it's a little too early to tell, of course, but if you look at this here as well, it takes a while to get out of these types of trends. We've been under 50 on the RSI since December. Okay, that's pretty much when all of this started happening. Obviously, you could say November more so, but generally speaking, we started hitting some dire straits once we entered into December, January, and February. That being said, we're not in bad shape, of course, but that is something to acknowledge. We do have potential resistance there, which essentially is fairly synonymous with right around 46,000. Once again, that was kind of the shelf that we had from before, and that is also synonymous too with the 50-day set moving average. So the 50-day SMA is effectively working its way down, so that could potentially work as a resistance moving forward. All right, again, just something that is potential, no guarantees, and obviously the 200 is trailing behind. Some people have the philosophy that the 200-day simple moving average will be tested. I don't personally think that until we break 30,000, we don't have to worry about that for the moment. Again, I know that's probably a ways away, if at all, but in general, that is essentially something that some people try to kind of keep an open mind again too. There's nothing wrong with that, but on the same accord, try not to attach yourself to a specific philosophy or thought process that we're going to hit that, because again, we don't have any specific signals telling us that we're going to do that yet. Right? We haven't broken this trend line yet. We haven't broken through some key level supports based on volume, and there's still a decent amount of things that need to happen in order for us to get there. Okay? And we're not even close there yet. So try to kind of detach yourself from that. Once again, it depends on what kind of trader you are. If you're an investment trader, just continue to dollar cost average. Like, the value keeps getting higher and higher as the price goes down. I love to see these price points. But on the same accord, if you're swing trading, etc., yes, it can be frustrating. Most altcoins are down 25, 30% just based on these small leg downs from Bitcoin. But keep in mind, this is much less severe than we've experienced in the previous past. So in general, this isn't as terrible as you might think. It's building more volume. There's a lot more long-term hodlers, essentially accumulating volume at this price point. So, eventually that's going to take precedent. And it would be best to be on that side of the spectrum versus just, only specifically day trading at this point. If you're not investing, you're probably doing it wrong. Again, it depends on your overall perspective. There's nothing wrong with a day trading mentality. I love that as well. I've day traded plenty in my days. But in general, big picture here, if you believe in crypto and it's something that you want to invest in, you should definitely be adding to your position as the price continues to lower. There's nothing wrong with that. Anyways, so that's besides the point. Let's go ahead and take a look at the 1 day and kind of work our way down. Once again, obvious things here just to touch on. 48,000 is a key level resistance there with the 200-day SMA kind of trending. The 50-day SMA, yes, while we lost that so far, it doesn't necessarily mean it's going to be a resistance moving forward. Now, hypothetically, it should and could. We'll see that here soon. But try not to think that that door is completely shut and that we're stuck under 42,000 forever because of that. All right, it's tentative. This 1 day candlestick still hasn't closed yet, and there's still plenty of trading left. So once again, that's typically adverse if you're underneath the 50-day set moving average. We want that to work as more of a support instead of a resistance. And yes, truth be told, we did lose that today. But again, that doesn't necessarily mean that the sky is falling and it's essentially a straight downward trend from here. But it isn't great that we lost that. All right, let's just acknowledge the obvious there. We also are having trouble getting back up over 50 on the RSI on the 1 day. And to me, the 50 on the RSI on the 1 day is probably the most impactful. So that being said, that is working as a tentative resistance, but that is roughly right in the range of about 44,000. So hypothetically, the price were to come back up and try to test, we'll have some resistance at 44,000 approximately. Based on that, as well as the fact that it was a previous resistance level too, you can see that 44,500 was a very strong resistance in the past. We likely need to expect that to be another resistance level. All right, so the price were to recover, I would expect 44.5 to give us some trouble, at least the first attempt to try to get back above. But the thing we want to touch on here, just while we have it up here, of course, is the support level here at about 40,000. Because based on Fibonacci retracement, it's rare for the price to come back down, at least in an ascending type of pattern that we're in. We're still in an ascending channel. For the price to come down lower than 0.236. Okay. In other words, that's this lowest Fibonacci retracement line. So the price down here at about, 37,700 roughly, all the way up to 48,000. That whole range there is basically telling us that we should not expect to retrace lower than 40,000. Okay. So I firmly believe 40,000 should be the bottom. We may see a wick down below that, but I think a 1 day candlestick close essentially above 40,000 and we're golden. Let me go ahead and remove that too, just kind of put perspective here as well, and kind of explain some of these levels here. First of all, this was a previous resistance / support. Now it's considered to be resistance because of the fact that we did lose that. You can see over the weekend the volume accumulated right there at that price point. But once again, we did have extremely low volume this weekend. That's a telltale sign that there's a lot of fear, uncertainty, and doubt. So now the bears are taking control and they're pushing the price action down. That's all well and good, of course, but on the same accord, that's the main reason why we lost some of these key level resistances, because there wasn't any volume to support it. Apologize, I'm still getting over cold and not trying to sound all funny here. So anyways, to kind of summarize though, big picture here, that we lost that support, and now we're testing this other support level here, and this is 40,700. Now 40,700 kind of goes back a ways. So if you look back here, it's always been a point of contention. It was a strong resistance level here previously. We saw a lot of volume accumulation right here at this price point before it took off, and of course the price would not go any lower than 40,000, roughly 500 at that time. Okay, so if you were to kind of consider that as being a strong support and resistance level, it could very well work as a strong support now, synonymous with 40,000, essentially, in a lot of ways, with the Fibonacci retracement lines. Okay. We also want to take a look here at the volume profile and the overall big picture here. So ever since the price broke, just say 30,000, where's the most amount of volume? And we can see here that the price is traveling into a strong volume channel. What that basically just means is that anywhere between 30,000 and 40,000, we have the most amount of volume accumulation. Just say 2 years to date, essentially roughly a year and a half's worth of trading data. We have that much amount of volume. Okay, so that's a very, very good sign. That basically tells us that the likelihood of it going below, yes, it could happen, and we'd have very low volume below that price point. Until we get there, we can expect 30 to 40,000 to be a very strong support level or channel. I know it's a wide range, and it's like, oh my gosh, that's terrible. Like, we could literally see 30,000 in the near future. Yeah, that's a possibility, of course. But on the same accord, how likely is it the price to get pushed down that hard and that fast? For one, we have to break this channel here, which we haven't seen yet. Okay. Again, it's continuously testing levels, 35,000, 36, 37, and now potentially 40. Okay, so 40,000 is tested. I wouldn't say it's the end of the world. We're almost there anyways, but on the same accord, we need to acknowledge the fact that the price hasn't broken that channel yet, and until it does, we need to kind of respect the fact that that should continue to maintain itself. All right. Another thing we want to take a look at too, kind of more rudimentary, is just the TD sequential kind of telling us we're at day 7 of this overall continuation to the downside. That being said, we could expect at least a couple more days of continuation as well, because in cryptocurrency, it never comes to full fruition, but oftentimes when you hit a 7, 8, or a 9, you could expect a turnaround. And if you see here, we recently hit a 9 and it continued higher, but it did have enough consolidation there to continue to push up. From here, we haven't had much accumulation in volume, so the price is essentially continuing to decrease. But there's a point in which the price is unwilling to continue to go much lower, and we're getting kind of to that point, especially with us trending closer to 30 than we are 50 on the RSI on the 1 day. Tells me we might have, I would say best case scenario, 1 or 2 more days of red, followed by a likely sideways progression and then an increase there to continue to maintain this trend line. All right, let's also talk about one other thing as well here that I've heard thrown around is the bear flag. And bear flag is when the price comes down, works itself into a channel upwards, which we're in right now, and then eventually breaks down lower. There is potential of that as well. So we just got to acknowledge the elephant in the room. That is definitely something to consider. That could happen. Now, will it? Hard to say. Really just depends on a lot of different factors. I don't personally subscribe to that just based on the simple fact that if you look in the past here, and I drew this out previously, we had a descending type of pattern. And normally the price comes down, works itself into a wedge, and breaks to the downside. Because again, it started from the top side. That didn't happen. That in fact caused this extreme situation here where the price had to increase. Obviously we had an increased amount of volume, and then of course it continued higher. But this looks very, very similar in that sense, whereas the price came down from a higher point, we're still maintaining higher lows, and we haven't officially broken this channel yet. So again, until we break to the downside, I think we're in good shape. Honestly, a close below 39,000, we'll maybe have to have a different conversation. Until we get there, I think we're still in decent shape here, and we're going to probably likely see some volume accumulating here in this channel between 40 and 42,000 over the next week at least. So this week should be a consolidation type of week where there's going to be probably some wicks down or some wicks up, but it'll probably hold true to the sideways at this point. Okay, so I just hope that kind of makes sense. Again, just throwing some different concepts out there and ideas so you can remain open and cognizant, because it's important as a trader to acknowledge everything that you can, right? There's definitely a lot of different possible scenarios out there. But to attach yourself to only one thought process or one idea is a terrible call, and I don't think it's appropriate. So I would hope that you exercise the freedom to think how you want, but on the same accord, try not to attach yourself to like a specific philosophy, because certain things don't always happen. I mean, statistics are made up on the spot, and most of cryptocurrency or just trading in general is random statistics being kind of adjusted every day. That's why the story changes every day, because honestly, you have to learn to adapt and adjust to your environment. You can't remain a constant bear or a constant bull, if that makes sense. Anyways, just take a neutral stance. You'll find, you'll thank me later if that makes any sense. All right, taking a look here at the RSI. Here's another reason why I feel like we shouldn't go too much lower, at least in the immediate future. Obviously, we need more consolidation. We need to be able to break this lower high pattern. and more effectively just continue to just go sideways for a little bit. Like, we really just need to have that happen. Every time we go sideways, we leg down and just continues this constant downward staircase pattern. That's normal. That's very standard for the situation, but on the same accord, we got to acknowledge here the fact that we are extremely overextended here on the MACD, kind of telling us that the bears, while they're in control, they're losing control. If that makes sense, because it's such an exhaustive state that what goes down must come up. Again, I personally think that we should experience a recovery here in the fairly near future, but as you can see here, we're still under 50 and actually technically under 30 on the RSI. And if you look at the history, anytime we've come under 30 on the RSI, there's been a decent amount of increase to follow that. Okay, right? So again, not every situation is perfect. It's not 100%, but statistically speaking, in this regard, when you have an RSI under 30, you should experience some type of recovery, and the price shouldn't be held underneath that level for too long. Okay. So again, by the end of today's trading data, we should see the price kind of consolidate sideways closer to 40,500 is a rough estimate, and then potentially increase from there. Again, there is still a small potential to see a wick down, but I think that the bears are getting exhausted at this point. They can only push the price down so long before everyone decides it's a good value. And right now on the midterm here, the 4 hour is telling us we have a very, very good value for Bitcoin. Okay, so again, keep that in mind, dollar cost average whenever possible. Other than that, let's go ahead and take a look at the 1 hour. Obviously, we're going to be well below the cloud. It's pretty much non-existent. So basically just telling us that the shorts are in control. And obviously, bears are having a field day. So really, if you've shorted, congratulations, very well done. But I would just be cautious and careful here, because there could be a sharp increase or change in direction based on the fact that it's extremely overextended in a lot of ways. Take a look at TD sequential here as well. We just hit a 9 on TD sequential on the 1 hour and previously hit an 8. So we've had this exhaustive state here. So we came up to an 8, came down, hit a reset around 8, got a consolidation, and then down again. So we've effectively, in a lot of ways, it's not 100%, but we've hit, anytime you hit 2 9s in a row in whichever direction you're heading, the likelihood of the pullback is much higher because you've overstepped your bounds. All right. And if we take a look at the volume weighted average price too, you can see the price is well below those standard deviation lines, telling us that we are in a position here where the price is extremely overextended. In other words, it shouldn't be coming down any lower than this, but it still is. Okay. So again, recovery I feel is imminent based on a lot of factors here. I'm seeing fairly consistent overextension, and I do feel that a correction would be necessary. Now, correction, when I say that, I'm not talking tomorrow we're going to see 46,000, but I am thinking here that we should at least see some kind of recovery between 40 and 42 through the remainder of the week, and we're probably going to have like a battle going on between 40 and 42,000. That's my speculation based on the data here. Once again, we could lose, the sky could totally fall, and we could lose this type of pattern that we have here so far, but generally speaking, we just kind of gotta go with a lot of different scenarios and kind of anticipate, best and worst case. I feel 40,000 is probably likely the bottom, so we've established the fact that between 36,000 and 40,000 is a strong amount of volume, at least in the relative recent past. When you look here, let's go back, just say the beginning of the year. As soon as the beginning of the year here, we look at this, you can see we have this strong amount of volume accumulation right at about 39,000, and right here at this point right now, there's not a lot of volume. So again, we could see a wick down. But if we look back, just say roughly a full year, as a rough estimate, let's go back, right around 1 year, we can see once again a tremendous amount of volume between 32 and 40,000, or the most essentially between 36 and 40. Okay, so again, just some things to be mindful of. Obviously, there's no foolproof 100% plan here, but generally speaking, I don't expect the price to go tremendously lower from here because we are at this hyper exhaustive state right now. And at this point, a turnaround I think is imminent. And when I say turnaround, just more so the fact that the price should go sideways for some time, and we shouldn't experience anything lower than 40,000. If we do, it's probably going to be a candle wick down. I would say worst case scenario, we get a candle wick down to 39 or 38. We'll still be perfectly fine because we're still honoring this trend line. Right now at this point, if we have this point of inception, 39,600 is essentially the area in which the price could and should likely turn around. All right, that'd be the worst case scenario there. So again, I'm not super concerned here. I just like the value. I've been adding to my position pretty much every leg down, because that's just kind of the way that you should do it if you're dollar cost averaging into your long-term investment. So again, if you don't have a long-term investment, you're doing it wrong. I get that you want to make money for today, but big picture, what are you going to do when you want to retire? You want to be able to use your Bitcoin income because Social Security is no longer an option. I don't know. It's up to you, of course. Different stories for different folks, of course. But generally speaking, that's kind of where we're at. And I hope you found benefit here. I'll stop rambling and talking about this here, but I hope that I brought some perspective to you and helped you understand kind of abstractly the overall sense of things right now. Because again, it's not. It does feel like it's a terrible situation. Trust me. When you have a full week's worth of just constant battering the price down, all your altcoins are suffering, it can be tough to want to get your mind right. But the best thing you can do is keep an open mind and make sure that you are being the best trader that you can be, and picking a side when necessary, but also not attaching yourself to a specific philosophy, and that can cause problems. Either way, I hope once again you found benefit. Thanks again for joining me here. And if you're not currently a community member, CryptoCache.tech is the website. Link in the description below. I look forward to working with you. Hope you have a great rest of your day. Thanks again for your time.